Okay, so again, 10.3 is all about the bank reconciliation. So we dealt with the previous section was dealing with the time value of money, right? Investing into these kind of investments, right? Either a loan or a credit card or whatever it is, a bank bond. Now this time, this is a little they're kind of along the same lines because all, in a sense, we're all dealing with money. But in this case, we're dealing with a bank reconciliation, right? Because with a bank reconciliation, what you actually are going to do is you're going to basically compare and contrast your actual bank statement with your actual check register, right? Or same thing, vice versa. Every time you make a charge on an account, right, such as your bank account, you want to also make sure that you keep track of it, because we have to also know a few key factors when it comes to your bank statements, right? We all know that electronic transfers, they can happen within any times between 1 to 2 days. But if you have a check per se, sometimes they clear within 1 or 2 days. Sometimes they take anywhere from 3 to 5 business days, especially if you are working with a bank that does not open on weekends. So for example, right, I received my paycheck. It was readily to be cashed out on Friday. Saturday, thinking, oh, my bank should be able to do work for me. I deposit my check in on Saturday, and it didn't clear until Tuesday. So those are the exceptions when you're doing this. And same thing with a credit card charge too. Sometimes it's instant, sometimes it takes a few hours or even a day or two for it to record it onto your actual statement. So with that being said, you can already assume if you're a regular business, you're constantly writing checks, you're constantly depositing checks, you're constantly charging your bank card, whatever it is, right? You have electronic transfers, whatever it is. At the end of the day, you want to make sure that your check register or your checkbook or your checking account, matches your bank statement at the end of the day. And you're also keeping track of what checks actually cleared and what checks haven't been cleared yet. Now again, it's a two-way street, right? You may send a check out, right? Some people, right, they'll do it right away because yes, it's money. Some people, they wait or they forget about it, and it's like you're pending and pending and pending, right? And you wrote this check, it's been almost 3 months, this person hasn't even deposited yet, right? That's also a safe way for you to also keep track of your transactions, because then you can call the vendor and be like, hey, I sent you a check about 2 months ago, did you receive it? And if they say yes, they received it, they say no, then that's the situation where you need to void your checks. Okay, so a lot goes on beyond that, but this is a great way for you to keep track of your transactions, especially if you're dealing with some kind of paper trail, such as writing a check. And yeah. Okay, so with that being said, we're going to also compare how much money that you have in the bank. All right. So again, we are familiar what a check looks like. We learned this in chapter 9, right? That these are the key components that you need to have. But the most important, I would say, has got to be the date and the signature, right? Authorization that this check is written out, and when can you cash it out. Now, oftentimes, right, you will see a lot of businesses, they will set the date in advance for the vendor to know that you cannot cash this check out until this day, right? And usually that's a very good technique, because let's say you made the check available for any time. You made it available the day that you sent the check. Now, with that being said, anybody can intercept that and cash it out for themselves. So it's good to also have that little time frame when you can actually be able to actually obtain the funds. That's also very important. Okay? Now, with that being said, of course, the amount is important as well as having your bank account on there. But again, one thing that's going to validate this check is your signature. Okay? All right. And yes. Okay, so here we're going to be introducing to you what the check register is. So when we deal with going into a fictitious business, we are going to be practicing using a check register. So a check register it's like a checkbook, right? Every check that you write out, you're going to record the check number, who you wrote that check to, and for the amount that you wrote the check out to. Okay, plus the date. Don't forget the date. But yes, okay, so a check register. So if you guys ever done this before and you guys have a regular checkbook that you have at home, it's that extra paper that's attached at the very top of your checkbook itself. That's what this is. This is an exact replica of a check register. So again, you're going to have key informations of this. Key information of this. And the most important thing is what you're going to do is when you utilize this is you're going to compare. I wrote this check. I made sure I wrote this check and it's for this amount. Now, if the bank charges you less or charges you more, maybe you did write the check wrong, whatever it is, you can find any discrepancy that's going to be going on with your check because you have proof that you've recorded this in your check register. All right, then the second thing I'm going to be introducing to you is going to be your bank statement. So, of course, wherever you go, you will always have a bank statement, right? Usually, typically, they send it to you out every single month, and that is where you're going to get. Now, for example, for me, I have a bank statement for every month, but I don't have it sent to my mail every day. I have it online. So I can pull up my bank statement at any given time for whatever month that I want. Okay? And that's what you can definitely do for your own bank as well. You can have your own bank statements for any given time period. Now, typically they usually are at the end of the month, which is definitely a good time to reconcile your bank statement and compare it to your actual checking register. Because at the end of the day, at least instead of keeping track of it week by week, at least a month gives you enough time to be able to pull out the information and be able to compare and contrast. Now, few key terms that you're going to be also learning is going to be what an EFT is. So pretty straightforward. It's an electronic fund transfer. So if you're using like applications such as like Zelle or Cash App or Venmo even, those kind of things is going to be considered an electronic funds transfer. And also if you do that using your bank and you are a business, you can collect a portion of interest on it. You just have to go to the bank and be able to set that up. Okay. Other things, there's going to be an ACH, which is called the auto clearing house. So you get a percentage for every time your check clears at a certain time period. But usually this is the interest that you collect if a person, again, if they pay on time or something like that, okay? If they give you that kind of interest that you can collect for just clearing those checks. And then lastly, NSF. NSF stands for non-sufficient funds. So yes, it is very, very, very typical of all businesses to write out a faulty check. And with NSFs, the bank can be very generous for you and they may pay for that extra amount that you have. But they'll charge you for not having enough money in your bank, and they'll charge you an additional charge for writing that check. Okay, so they're going to charge depending on which bank that you bank with. They may have a lot of rules. So for me, for my example, I bank with Bank of America. If I go under the amount, They're gonna whip me with a non-sufficient funds, right? They're gonna or a bank over withdrawal charge, right? And for every day I do not put money in it, they just keep charging you the same amount. So I think the first couple offenses are $35. After that, they start charging you $55. And that's a lot, especially because their rule is if you don't put money in the bank every day, for every day that your account becomes outstanding, we're just going to keep charging your account until eventually you pay it. So that's just my account. Okay. Now there are, again, NSFs. It just depends on who you're banking with. You can also be charged service fees as well. If, let's say you have them process your payroll, whatever it is, right? You're using their bank services, whatever it is, okay? So typically when you see a bank statement, you're going to have your beginning balance at the top as well as your ending balance, right? Depending on which month that you choose your statement to be. So it could be from the January to January 31st, okay? So look at you'll know how much your ending balance is as given at the end of the month. You're gonna get a list of all your transactions, right? All the checks that you've wrote, right? All the checks that you've deposited, all the cash withdrawals that you have taken out, but also the cash deposits that you've also entered in as well. So there are a few things that you will see. So in this case, on a normal statement, it is sectioned off in different categories. So you'll have the checks that you've written, the deposits that you've made, and anything that's other, such as withdrawals or, yes. Usually those are the three things that you would see. And then somewhere on your statement, whether it's at the top or at the bottom, you're going to be looking at how much interest you've collected, right? And then also you're going to be looking what kind of fees that the bank has automatically taken out of your account. So for example, again, if you overdraft your bank, that's an automatic charge to your bank account, and they do it without notifying you. Okay? So that's why it's always good to check your bank account every single day. But typically that's what it would look like. You would have your those kind of information on there. All right? And then we're going to introduce you guys to the cash ledger. So the cash ledger, or it can also be used as the checking register, or checking ledger. So what this pretty much does is when we look into our fictitious business, right, we're going to be having a checking register, a checking ledger. And what that does is basically it tallies every single transaction that deals with the bank. So in this case, mine is going to be the cash ledger, but it could be the bank ledger, whatever it is, right? It's going to be one of the accounts that you're going to be utilizing to compare your bank with your process of your idea of what you think that you charged your bank for. So in this case, it's going to give you a transaction of all the deposits you've made, all of the checks that you wrote, right? And you're going to get your own ending balance at the end of the month. Okay? So how we're going to actually be using the bank reconciliation. So ultimately what we're doing is we're going to be comparing our bank statement to our cash ledger. And how we do so is, let's focus on the bank side first, okay? Now, on the bank side, what do you know that the cash ledger doesn't know? The bank, right? We know that we're going to charge all these different types of things. But in this kind of situation, right, when we're looking at our bank statement and we're comparing our banks to the cash, we only know what checks have cleared and what checks have been deposited, or cash that has been deposited, whatever it is, right? But ultimately, the cash ledger knows every single check and all the deposits that were made, but the bank doesn't recognize ones that happen at the very last day. Okay, so how we're going to do this is when we're looking at the bank side, we're looking at which deposits are currently in transit, meaning which ones haven't cleared yet, which ones are pending, right? And then we're going to subtract out our total amount of checks that are outstanding, meaning checks that haven't been processed yet. They've been submitted, but they haven't been cleared yet. Or in other words, your vendor on the other side that received this check hasn't deposited into their bank yet. So this is considered an outstanding check. From there, you're going to get a new ending balance, which should equal to your new ending balance on your cash ledger. So from the bank side, we're going to start with our ending balance. Okay, we're going to add our deposits and subtract our checks that haven't cleared yet. And we're going to get a new balance. On the ledger side, right, we know that we have all the checks, or we've written all the checks. We know what we deposited, but what we don't know is how much the bank actually charged us, right? Or what interest we have collected from the bank. So in this case, we're going to update our cash ledger, right? We're going to start off with our ending balance in the books. Then we're going to add any interest that we've collected. So any ACH or any just interest in general. And then we're going to subtract out any service fees that the bank has charged me. Because on my side, I don't know what they charged me. I have to look at my bank statement, right? I didn't know I had an NSF check. How much did they charge me? So now I'm going to go ahead and adjust my cash ledger, and I get a new ending balance. And again, at the end of the day, these two must match. Now, okay, I said a whole bunch of words, okay? Let's just go ahead and do the example. So this is what the table's going to look like, okay? Mine's a little colorful. Yours is going to be plain black and white. But in this case, whatever general rule of thumb you want to use, whether you want to start on the bank side or the cash side, it doesn't matter. As long as you get one side started. Excuse me. So first, I'm going to go ahead and do the bank side because I'm just going to do from left to right. So the bank side, first thing I need to have is my ending balance. So I'm going to go ahead and look at my bank statement and confirm I'm going to confirm what the ending balance is. Usually it will tell you at the top, it will say statement balance as of the date. And that's the number you're going to take. So you want to make sure you get the one where it's the last day of the month. So in this case, I have it for May 31st. Okay? May 31st is my ending balance of the ending of that month. So right here, I have $9,446.40. So I'm going to go ahead and take that and plug that in right there. Okay? Now the next step I'm going to do is, because I need to add my deposits in transit, right? I'm going to compare my my check register, or in this case, my cash ledger, and I'm going to compare it to my bank statement to see which deposits actually get cleared. Now again, with this one, it could be whether you deposit a check, whether you deposit cash, whatever it is, that is what this is going to be entailing, right? And you're going to get a deposit slip number. So pretty straightforward, right? You're going to have the date of when you deposited, you're going to have a deposit slip number, and you're going to have the amount that you deposited, whether it's checks or cash. So in this case here, I'm gonna check out my cash ledger first. I'm gonna determine that I have deposit number 421, 422, 423, 424, 425, 426, and 427. Now I'm gonna compare my bank statement. Which one's actually cleared out? And in this case, I recognize 421, 422, 423, 424, 425, 426. Oh, but I'm missing my 427 deposit. Okay? Why? Usually when you deposit money at the end of the day, on the last day of the month, and we all know these kind of deposits, right? They can take anywhere from 1 to 2 business days to clear. Let's just say May 30th happens to be on a Saturday. Then that's not going to clear until Monday or even Tuesday if Monday was a holiday. XYZ, there's a lot of incoming factors that you need to know. So in this case, because I deposited so last minute, the bank hasn't had time to process or recognize it yet. So in this case, I know for the total amount of $254.52, that is going to be a deposit in transit. It hasn't cleared in my bank yet. So I'm going to go ahead and add this number in here. Okay? So then the next one is going to be looking at outstanding checks. So again, I'm going to get my check register out, and I'm going to compare my bank statement to see which checks have cleared already, right? These are checks that I've written. And in this case, I'm going to just go through every single one, and I'm going to do a shortcut. So I've already done this before. So in this case, I know that I'm missing check number 130, and I'm missing check 133. And I'm going to double compare that to my ledger, and my bank statement. So I'm confirmed here that I'm missing 2 checks because 2 checks haven't cleared yet. And they're in the amount of $846, and the other one is for $245. Again, the last check hasn't cleared yet because I wrote it on the very end of the month. So that's for sure not going to be on there. And then this check for some reason hasn't cleared yet on 5/18, maybe because the vendor hasn't deposited into their bank yet. Okay, so here I've already noted that I have check number 130 missing and 132 missing. Wait, I have 132 as well? Oh, okay, so I guess, I didn't see that bolded part right there. So yes, I am missing 3 checks, thank you. A great way to also do this to make it quick and easy is count how many checks you have in your check register, and then count how many checks you have in your bank statement, right? That's automatically going to tell you I'm missing 3. In this case, I did not see the one before up above it. So I am missing $1,000 right here. So I'm going to go ahead and list out those numbers right here, and I'm going to total them up. So here I listed out the exact numbers for each check, and then I summed it up in the second column to the right. And here I have to subtract this $2,000 because they haven't cleared yet. They haven't been taken out of my bank yet. So by doing this, I'm going to start from the very top. I started out with $9,446. I'm going to add my $254 because that's money I placed into the account. And I'm going to subtract my $2,216 because those checks haven't cleared yet. And in this case, what's my grand total now? $7,483.96. That is going to be my current new adjusted balance, right? But that doesn't stop me here because I can find a discrepancy anytime in between, right? I might have missed something. I might have done this, but we'll just keep that number there for now. Okay. So now we're going to actually move on to our cash ledger side, right? We're going to be looking at our cash ledger, and we're going to determine if my good accounting, like what has my ending balance as of the end of the month that I'm reconciling for. So in this case, on what is this? May 30th, I have a current balance of $7,338.96 in my bank. That's what I'm keeping track of, right? This is what I think my bank should have, right? After writing all my deposits in, after writing all my checks out, this is what I think I have in the bank at the end of May. So I'm going to go ahead and pop that number right there in my ending balance. Okay? Again, I'm going to add any interest that was collected from the bank. So in this case, we're going to go look at our bank statement again. It can be very notable on where it's located, but oftentimes it could be at the bottom of your bank statement. It could be at the very top of your bank statement. You just got to look for it. So in this case, my bank statement here, it lists right here that I have interest and I have an auto clearinghouse, right? So I have that for a total of $15 and a total of $215. So I'm going to go ahead and add that in there, and I'm going to get a grand total of $230 that I need to add to my bank, because interest, right, I've collected. This is interest income. This auto clearing interest, or auto clearing house, right? It's money that it's money that I've, what do you call it? Received. Okay. So there you go. I'm going to add that in there. And then now the second portion is to minus any fees. So in this case, what did the bank charge me? Well, the bank charged me a service fee, a service charge of $50, and I had a return check fee. So I had some issues here. So in this case, I got charged $35 to return a check, and I also got charged $50 for the bank service charge. So in this case, I'm going to list it out here, and 50 plus 35 gives me a grand total of $85, and I'm going to subtract that from my amount. So in this case, I started with $7,338. I'm going to add the interest that I've collected, so my $230, and I'm going to subtract out my $85 of fees. And in this time, I'm going to get a grand total of $7,400 exactly. And ding, 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 I matched my bank and my cash ledger. They are equal, and that means I am good to go. I am squared away. All I have to do now is for future references. Now that I know that I have these three things, right? I have a deposit pending. I have 3 checks that are pending, right? Those are going to be something that you're going to have to keep track of the next time you do a bank statement. I'm sorry, a bank reconciliation. Okay? So that's what you're going to see on the next bank statement. Okay? Any questions in regards to how I completed this bank reconciliation?
Question. In reality,
Mm-hmm.
business accounts
Mm-hmm.
with the banks,
Mm-hmm.
they earn interest? I don't think they earn interest at all.
It depends. It
For
depends.
example,
Some of them do, some of them don't. For example, like the bank can collect interest if you say That's why when you set up a bank account with the bank for the business, you can set up a way of like saying, oh, if you electronically transfer to me, right? The bank is going to charge you an additional charge on that, right? And that's going to be money collected for you. So, for example, they do convenience charges, right? Oh, if you don't want to write me a check, oh, you can send me money using a bank deposit, right? Or a bank transfer slip, right? But what happens to that if you don't do it by paper, right? A lot of times you're going to notice that besides Zelle's come 100% free, but Zelle didn't come around until maybe like 2 years ago. But before that, we had things like Venmo. Venmo actually charges you a convenience charge. They also charge you for if you use a credit card. They charge you a lot of things underneath. When that's using Venmo as a program. But oftentimes the bank also does that extra charge as well. So again, when we go into looking into when we go looking into QuickBooks, you're going to see that there's a lot of extra fees that you need to calculate. But interest is definitely going to be collected. As far as most likely, it's going to be something that you do, like when you do electronic transfers, you're more likely to collect interest or an additional fee on top of that. So that's going to be separate from what you actually are charging for. Does that make sense? There's always that convenience charge that you have to additionally pay because you're paying using electronics. Okay. Nowadays, it's so much easier. It's free. You don't get charged for that, and that's why a lot of times when companies were doing this back in the day, they would refrain doing electronic funds transfers because of that interest charge that they had to do. They would actually just write the check out. But nowadays, with the ongoing majority of people being online, the banks decide to just be free-nilly and provide that service for you for free. Okay, but back then, they charged you on top of that. Okay. Any other questions? Oh, sorry, Lynette, what were you saying? Oh, sorry, I talked over you.
With this, if the company has a loan, instead of having the return fee, can they use loan as an automatic transfer that would be posted as deposit?
No. Okay, so for this one, loans are excluded from your bank statement. Okay, because loans is a complete separate thing from your actual bank. Your bank is the reoccurring one, it's the one that you're constantly making deposits for. And your bank loan will definitely be a complete separate statement. It's not going to be included in your current one. So this interest here that you see isn't going to be the interest that you're collecting on the bank loan. Because ultimately, why am I getting money for the interest? You're supposed to be charging the money for that. So this one, the bank, is going to be separate from the loan. Okay? All right. Hopefully that answers your question. Okay?
Okay, Lynn, I have two questions.
Uh-huh.
What would be an example of an ACH?
So for anybody that does electronic transfers, yeah. So like a credit card transaction. Because in here, the bank, you don't see a credit card transaction in there.
So when I automatically pay my bills, because there's several bills I automatically withdraw every month, that comes out as an electronics transfer, I think, and not an ACH.
Yes, but some.
And the
So,
ACH is a credit card payment, so I'm a little confused on those two.
okay, so that's different. Yes, it's electronic transfer because you're paying someone else the money, right?
Yeah.
But if someone pays you with their credit card, it goes automatically to your bank, right? So that's an ACH. If someone's paying for their items with a credit card, yes, pays you with a credit card.
Okay.
Okay, so that's an auto clearinghouse.
We add it into our bank.
Yes. Yes. So in our bank, it doesn't record it as we received money from this person. It's going to be considered as an auto clearinghouse. Okay, so interest is definitely separate. Auto clearinghouse is every time you receive some form of payment electronically. So in this case, a credit card would be a perfect example, right? The bank, right? Since since when they do charge on the credit card, it's directly transferred into your bank account. Now it's not going to be recorded as a deposit because you're not really depositing money, and it's not going to be a check that you received because you didn't receive check. It's going to be considered an auto clearing house. Yes.
Okay, and because, so electronic I guess I'm confused because electronic transfers can be in both directions, like transferring to you and then you transferring to them.
Yes. So there's a difference between using a credit card and actually using your bank to transfer the money for you, right? So yes, it does apply in both ways, but like I said, nowadays it's free.
Okay.
So in this case, yes, you are doing electronic transfer, and it will appear on your statement as you did a bill payment, right? But that's nowadays. This is kind of nostalgic, kind of looking back in the old times. But yes. And in this case, that's what I was trying to say to you guys. Like, you will, on your bank statement, you will actually receive the money as a deposit now if someone pays you with a credit card. Because you no longer have ACH considered anymore. Because nowadays, it's all in all. It's all going to go to the same place. But I just wanted to let you guys recognize that there is an auto clearinghouse, because ultimately, you're not going to be receiving the money that you deposit, right? Especially with a credit card, right? If it's automatically going to go into your bank account, what you don't know is they're calculating interest on top of that, because if you are using Visa to collect the money for you, you get charged an additional interest fee that you have to pay for having Visa to do a service for you to get connected to your bank and collect the money for you. So in that case, then so on and so forth, you gotta calculate even more. But in this case, that's what an auto clearinghouse is. It's basically for any credit card transaction that you've done. It's not electronic funds transfer, because electronic transfer is when you actually call up your bank and say, I need to transfer this amount to this person's bank. Okay? That's the fine difference between them. But I don't know if that answered your question or not. If that made any more clear sense.
Yes, I'm okay now. Thanks.
Okay, of course. Yeah. So a lot of things that I see, like I know I taught when I talk into it. I don't want to go into depth, reason being is because we're only learning the fundamentals. I don't want to confuse you guys with even more materials that you need to know, because ultimately, if you do pursue accounting, you will eventually know that. Especially when you're dealing with a bank, then yes, you will eventually get there. When you're actually building your own business, that's when you will learn about all these other things. But in this class, I just want you to understand this is what you got to do every single month, just to be on the safe side and just to make sure that you're doing good with accounting and that you're keeping track with the bank, but also keeping track of your money, right? You're making sure, did my vendor even receive my paycheck or my check? Did I even pay for this? Did I make sure that I wrote the right number down? Things like that. Okay? Any other questions in regards to bank reconciliation? Okay? So, again, there is going to be beyond what you see here. Okay? But for this class, all I really want you to know is your do's and your ifs. So if you're dealing with the bank, you're going to be doing your do's, right? You're going to have your deposits and outstanding checks, right? If you're dealing with the cash ledger, you're going to have ifs, right? Your interest and your fees, okay? That's all I want you guys to learn for today. But when we look into examples, obviously I'm going to throw you guys off. I'm going to add some more things that you should be aware of, because ultimately when we leave this class and you are doing a bank reconciliation, there's more than just deposits. You're going to have your cash withdrawals. You're going to have interest that you have to calculate for those credit card companies, right? You're going to be dealing with a lot of other things besides NSFs and service charges, right? You're going to have a lot of different things that you'll be looking into. But ultimately, just for this class, I just need you to recognize your do's and your ifs. Okay? And again, reviewing 10.2 right here is dealing with your simple interest as well as your compound interest, right? Again, with this little cheat sheet here, I've also included the Excel formula so that you can have this at all times if you use it, for future. Again, like I said, I will test you only on simple interest because I can't make the assumption that everyone has Excel and can use Excel, and vice versa. So I'll be generous to you guys and just only test you on simple interest. Okay? Any questions in regards to chapter 10? Because this is it. This is the complete final part of chapter 10. No? We're good?
Nope.
Okay. All right. So